So PayPal announcing today that it's bringing its stablecoin PYUSD to the Stellar network with a focus on remittances. So talk to me about this latest partnership and why the focus on cross-border payments.
Yeah, so Stellar's always been hyper focused on cross border payments and really asset issuance. And so these two things come together with PYUSD. They really wanted to be able to have ubiquitous use of the asset and also just to be able to get it into the hands of like humans and businesses that need to leverage this globally. And so when you think about where you want to do that, you want to do it on a chain where there's wallets that are going to be able to accept it and use that for cross border. We also have MoneyGram, which actually really helps them on the edge to be able to do the on and off ramping. So there's just a lot of really great use that they can see with respect to Stellar, and we're just really excited that it's going to be on chain.
And we've been tracking this evolution for a few years now of TradFi getting on board with stablecoins. But what's a view like from Stellar? Have stablecoins really clicked for traditional corporations, and has that education gap closed?
Yeah, I think so. I mean, I really think this last probably 8 months, 9 months has been pretty remarkable just in terms of the industry really bringing to light all of the value of stablecoins, but really just having the United States government really understand it and really have a focus on it. You know, just even today, they've moved the Stablecoin Act, and they're moving it to a floor vote. So all of these things happening really helps industry to say, "Oh, wait a minute, this is an opportunity for us to see the value of stablecoins." So it's not so much talking about like the blockchain technology. It's really saying, what are stablecoins going to do for our business? For example, like in the treasury side, you've already seen like tokenized treasuries have really taken off, and they've really done wonderful things for the businesses that have issued them. It cuts down costs. It opens up the market to them for new users. So there's just a lot that we've seen in the last 9 months to a year where there's just a lot of growth here.
And I'm going to ask you about that legislation in just a minute. But I think one area where we're still waiting to see mass adoption is actually among consumers. A lot of this case for stablecoins is being made to businesses. But I'm curious how you make the case to your retail user who might be used to using credit and debit cards and maybe aren't as focused on the speed of stablecoins.
Well, so the really interesting piece of this is that actually the retail users shouldn't have to focus on what they're using. The piece of this that we've wanted and needed in the industry for such a long time, and I think it started to happen for us maybe a year and a half ago, was just the user friendly design to make it so simple and to have the ease of use. So when you combine that simplicity and so that you just have this wallet, and yes, it may be stable coins that are operating behind the scenes and you have an opportunity to see that it is, but it really is just the fact that the wallet is really simple to use and it solves your problem. And so when you combine that with this momentum that stablecoins have really gotten because of the legislation in the United States, because of the industry really, and because of the financial services industry really saying, wait, this is actually an opportunity for us, those two combined really make it so that mass adoption can happen. So you can't have one without the other. You need user friendly design and you need the stablecoins themselves.
I think a lot of people want to extrapolate the Chinese experience to other markets, but you have to remember, they came from a completely different place. First of all, they did not have an embedded point of sale system in place, so very few of the merchants accepted credit cards. They didn't have really a large credit system in place, and so QR codes came naturally. And by the way, Ali and WeChat Pay battle for those merchants. Don't assume that they're profitable on that because they are battling for market share inside China right now. And so every country, this is the fascinating thing about payments, is different. Germany, Japan, very different thoughts about credit than we have here in the U.S. China came from leapfrog. You look at Africa, and it's a little like telephony. They didn't go from no phones to wireline to wireless. They just leapt right to wireless. Same thing's happening in digital payment. You look at Kenya and others. I forget, something like 40% of the GDP is moved through M-Pesa. So every country is different, and as when we look at the world, we don't look at a cookie cutter approach at all. We look at country by country. What is the right value proposition to put out into that marketplace? And so I think the Chinese market is probably the most developed market in the world around digital payments. To your point, doesn't matter where you go, you really don't use cash. Like you go into a lot of the stores, like things like shopping carts, like they don't even know what that is because they're just scanning and having it delivered.
Yeah.
There's no checkout. There's things like that. So it's a very different environment, but they have density in their cities, and it's.
I was thinking about Andrew saying that he didn't know how to tip, right, because he had no cash. But in China, right, they all just pull out their phone and give you their QR codes.
And by the way, that's a simple and easy thing for us to do in this country too. QR codes is a really easy thing to do for tipping for very small businesses. But we have an entrenched point of sale system here. It's going to be very different in the U.S. than China.
Brett, any last thoughts from you as we wrap it up?
Well, to the extent I would comment on the earlier panel, I think there was a comment a little bit like, well, Alipay is just embedding in New York City taxis as addressing the tourists. Alipay has grand ambitions in the United States. Yeah. I agree 100% with Dan that each market has its unique.
Do they admit that? I'm not sure they admit that, but you think that's they eventually want to be a big player in payments.
I think there's no doubt about that.
What makes you say that?
I'm sure Dan and I both have had conversations with people at both those companies, and I think this is a large economy. They want growth. They think about. I mean, Alipay in particular has been incredibly strategic about making investments and stitching together. They're the largest shareholder in Paytm. They're the largest shareholder in can't remember the payment network in Indonesia, and they're in some ways they're building their own version of an interoperable payment network, but closed to their world.
Yeah. Well, it's a great.
Welcome to the Crypto Teacher, and I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And I went over this earlier. PayPal using Stellar for cross-border payments. And it's all about the fourth industrial revolution because these fintech banks already have the wallets. And now they're just bringing them on blockchain. And the same thing is going to happen to every bank account. Only thing they're going to do is take a digital wallet, attach it to their savings or checking, and they'll be able to use digital assets without them even knowing they're using digital assets. And remember, the Crypto Teacher tells you. And Brad Garlinghouse and Dan Schulman laid out the plan. And it seemed like we'll never get here. But now, guys, with this executive order today, we know the robots, algorithms, and drones are about to take over this economy and pay each other with crypto without a human involved. And I know those who got my book early, you thought it was crazy. Those who started on this channel early, you thought it was crazy. But now, guys, we definitely see is here, and it's going to only move fast forward once we get this stablecoin regulation. And remember, the Crypto Teacher told you. When you look at places like India, they have been using QR codes since 2010. And then we have Trump touting the deal, guys. We know for a fact there is no deal. The United States and China are going their separate ways, and China is definitely not going to let anybody have access to the mainland like Brad Garlinghouse told you. Just like I stated, we see the plan. Eventually, China is going to take Taiwan, and the drums are going to get louder. The drums are already beating loud, but the drums are going to get louder. If you're part of the Patreon, you know what happened in Iraq. And then, guys, we have Paul Tudor Jones says the dollar is going to go down another 10% over the next year. And I say it's going to be more than that. Because once we get this stablecoin regulation, it's going to take about 2 years to be implemented. But the fact is, if you look at gold price right now, you're looking at a dollar about 50 to 75 cents. And remember, the Crypto Teacher told you. And then we have Gunlock telling you, nobody wants this long-term paper. And the only thing that's holding us up right now, of course, are the central banks. Because none of these countries are buying the long end. They're only buying the short end. Why? Because they know all about this digital economy. And remember, the Crypto Teacher tells you. Because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
president says it's a done deal, but it has to be reviewed. By who? He's the president. And I agree with you. We were told that we had a deal with the Geneva framework. We never saw paper on that. Now, again, we have a deal reinforcing the Geneva framework. And apparently Secretary Lutnick doesn't want to say we're going to see any text showing what that deal is either. It looks very much like this is a temporary truce. The key event here is the Chinese saying it's 6 months of magnet exports. That doesn't mean they're going to cut them off after 6 months. It means that they're not committed to this after 6 months because they've already seen that the first deal didn't even last a month. And I think that's the way we have to understand it on the American side, even though the administration is being coy.
I mean, you mentioned you're into yields.
I would say that the easiest long-term trades are, you know, the yield curve is going to steepen probably to historic wides. You know we're going to cut short-term rates dramatically in the next year. And you know the dollar will probably be lower because of that. A lot lower because of that.
How much lower? We're off 10% from our high right now. 8%.
Yeah, I would say I think that's a year from today, that's probably a realistic assumption.
In the last 15 years, there's been a number of corrections on the S&P 500. And in every single one of them, when the S&P goes down more than 10%, the dollar index, the trade-weighted dollar index goes up. This time, the dollar went down when the S&P 500 went down almost 20%. That's strange. Things are behaving differently. Usually when the Fed starts cutting interest rates across the yield curve go down. The 10-year Treasury almost always goes up immediately following the first Fed rate cut, and then it keeps rallying for a while. This time, the 10-year yield went up, and the yield curve is steepening. So I think what we have is a recognition that the interest expense for the United States is untenable if we continue running a $2.1 trillion budget deficit and we continue to have sticky interest rates. One thing that people fail to appreciate is how much the average Treasury payment has gone up. The average yield, the average coupon on Treasuries was below 2%. The entire Treasury market, all 30-odd billion of it, you average it all together. Some of them are old, you know, they were issued with higher interest rates, but it was below 2%. Now it's pushing 4%. And as long as bonds are maturing, and there's trillions and trillions of dollars of them maturing, a lot of them were issued back in, 2009, 2008, these other time periods. Even if you just issued them in 2019, some of these are starting to come due. And they were issued with coupons of 0.25%. And now it's 4.25%. So it's 400 basis points higher. So this problem continues to build. And there's an awareness now that the long-term Treasury bond is not a legitimate flight to quality asset. It's not responding to lower interest rates. It's not really responding to an inflation rate, which is now 2.5%. Probably going to go higher on the inflation rate because the ones that are rolling off from a year ago, I mean, the cumulative, I think, headline CPI that came out today, it was 0.18. But the one that was rolling off, I think, was 0.1. And if you do the next 2 months, those 3 months together, that quarter, the cumulative rise from a year ago was 0.1. So we're likely seeing the low point in near-term inflation. So yeah, I think the reckoning is coming, is that we have to somehow figure out how we're going to deal with $37 trillion. I mean, we're actually going to hit the 37 trillion number for real. It's still 36.95 trillion, but it's going up quickly. So yeah, there's going to have to be some pretty creative thinking, and the market's starting to believe that.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming, while everybody's sitting at home, get on stocks, the Xrp, the biotech stocks, and while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.